there's something I want to discuss here. So, Sky, you read a story this morning that so Jifat told us, and Dubik has confirmed that we were having problems with gas from Nigeria. So we had to quickly switch to heavy fuel oil.
Okay. And that problem was what? The gas couldn't get to us.
Either Nigeria didn't have gas or the pressure was low. Good. Now, whilst we are doing that, a total of 25.3 billion cubic feet of natural gas worth about $169 million was lost in the upstream petroleum sector through flaring, which means you just burn it. Now, the 2022 Public Interest Accountability Committee report on management and use of petroleum resources revealed this. The volume of gas flared in 2022 increased by 19.3% compared to the volume of 20.1 SCAF in 2021. Now, this figure is about 10% of the total of 253.56 BCF of both associated gas and non-associated gas produced from the three main fields. So Jubilee, Sankofa, and 10 give us 253.5 BSC of gas. Now, this doesn't make sense to me. So I'm going to call Ben Boakye to explain how this is even happening. So in the same week that we are having to have power off because we are not getting gas to power some of our plants, particularly in the Power Enclave, we have triumphantly announcing that we burned almost $170 million worth of gas because we didn't have any use for it. Ben, am I linking these two issues correctly? Am I right in linking this recent power outage over lack of gas from Nigeria to the SPIAC report? Ben Boakye, ACEP CEO, thanks for joining us. Am I right in linking the two?
No, I think you're absolutely spot on, Bernard. We cannot actually separate policy inactions or actions to ensure energy security or gas security for power generation. Because as a country, we decided that the cheapest alternative for power generation is gas. So if that is your cheapest alternative, then your energy security is to diversify the sources of gas that ensure that at all times you have enough gas to be able to generate power, because that's where you get the cheaper fuel to be able to generate cheaper power for your consumers. But usually when you hear policymakers speak, they look at the diversity of the fuel source. So they want a little bit of liquid and then the gas. And then you find out that even when the gas is not available, the liquid is also not available. So it's not even secured in the first place. And that is where we got it all wrong. I mean, the last assessment we did between 2019 and 2021, the flared quantity was about $300 million of gas, which means that this is gas that could have been utilized for power generation or for other industrial applications if we were, getting the policy toolkit right for us to be able to utilize the gas that we actually produced in Ghana. The sad reality also is that we have what we call no flaring policy, which means that the companies are not allowed to flare the gas. But where there is no commercial avenue to use the gas, you cannot compel them not to flare for operational reasons, because you can inject, but only so much of injection can happen at a particular time. So even though we have a no flaring gas, which is supposed to ensure that foreign companies that are producing the oil and gas actually have incentive to sell the gas to the market for us to use for other industrial applications, they have to flare it because they don't have the option to send it to the market.
Why? Okay,
failed over time.
Why is that? Why is that? So you have gas fields in the western part of the country. Your power plants are in the eastern part predominantly of the country. So is it that there is no means of transporting this gas from the western enclave to the eastern enclave, for which reason you still have to depend on Nigeria? Is that why we are flaring this gas?
Okay, good question. So we need investment to unlock the gas. So once you produce the gas, you need to process it. Our gas processing capacity is about 140, but we usually do around 120 max because of the capacity of the plant. So we don't have enough capacity to process. So ordinarily, we would have had to construct another processing plant. Or if we had a modular, processing plant, we could then increase its capacity. But because we have a fixed plant, we need to build a new train or a new processing plant to be able to take on the additional gas that is coming from 10 and Jubilee to process them before the power plants can actually use them. But over the years, we've not been able to do the investment. So it was known as, back as 2012, that before 10 will come in, we will need a second train because the first train was going to process Jubilee gas. We need a second train to be able to process the gas. That has been on the drawing board forever. All right. And that's essentially because government policy was for government to do it by itself. And the experience with CDB constructing the Atuabo gas processing plant makes it difficult for us to raise capital on our own from the market to be able to deliver the second train. There has been options of bringing in private capital to be able to deliver it. But again, it's the normal practice where in Ghana we think in years and not in seconds. And so years pass and the project is never delivered. So that is why we are where we are. So we are flaring the gas and we are looking for liquid fuel, import them with hard dollar that we don't even have.
So Ben, just explain. You are saying that we don't have, Ben, you say we don't have gas processing beyond 120 mm. So if you talk of gas processing, are you saying that the associated gas and then the non-associated gas need to be processed before it can be used in the power plant?
Yes.
And we don't have the capacity to process
it. You need a lean gas, which is essentially methane, to be able to use for the power generation. So when they split them, that's where they get the LPG and other condensates, and then the methane is used for the power generation. So it has to be processed. With Sankofa, for example, which is the ENI gas, they do very minimal processing. So that one is done because it's a non-associated gas. So they produce that and just ship the lean gas to the power plant. But for Jubilee and 10, because it's associated, they have to process it to be able to get the lean gas for power generation. So once you don't have the capacity to process it, then we are faced with the challenge of having to re-inject or flaring.
So in the ENI case, they transport this gas through, is there a pipeline from the west to east?
Yes. So that is another conversation. So we have invested money, about $180 million, to build the infrastructure to reverse gas to the east. But if you still don't produce enough, you don't have enough to be able to transport to meet shortfalls if they happen, because you're always going to have these challenges. It's known that intermittency, operationalizing the pipeline, once in a while, you have a compressor failure, you have problems, and you will need to have an alternative. So if we had enough in the west in the enclave, you could then pump that to the east for the plants in the east to be able to utilize those gas for power generation. But because we don't have enough, we are flaring what we actually producing, then that means that we still have to wait for Nigeria to kick off before we can have enough gas to generate. So I just always think that we're getting the policy actions wrong, and that is why we are where we are. For example, if you have ENI that is producing and being the most consistent producer, you could as well tell them to say that let's do the minimal investment we need to do to improve your output, so that even if you are doing 200 SCF a day, you have a throughput capacity of about 400 SCF. That allows you to pump in more gas when we need it. All right. And these are policy conversations that if you have with the owners of capital, those who have invested $7 billion on that field, they'll be, because when we were not able to do the reverse flow, they stepped in to finance the $180 million to do the reverse flow. And if they have done that investment, then we are paying for it. We can't make use of that infrastructure. It doesn't make sense to have put that infrastructure there in the first place, or to have done that investment. So we have to think holistically along the value chain to see what is possible, so that these kinds of explanation, always explaining to the consumer of power how gas is not flowing, how a transmission line is having challenges, is because it's easy to explain and go get a high five and say, oh, I was able to explain to the people and they're okay. But it shouldn't be our business to know how power gas is produced and how power is produced. But that is the environment. We have allowed these kinds of explanation without doing the hard, heavy lifting of doing the policy right and ensuring that we can actually always have the cheapest source of fuel available for power generation.
This is serious. Now, in terms of private sector interest in gas processing, you're speaking about ENI. Do we know if there's demand and interest in setting up gas processing facilities so that the gas from the 10 and the Sankofa fields will be useful in a lean form? Do we know if there's any demand for, or there's any interest from any investor in doing this?
No, I mean, last year, I think Ghana Gas signed an agreement with a company to set up a new processing plant. We don't know where that is going with that. We also know of the GENSA, arrangement that was supposed to also set up another processing plant, which we had problems with because of the commercial arrangements, which really undermine the interest of the state. Because you are discussing with the producers of the gas at a price of around $3 per MMBTU, and then GNPC was signing an agreement to sell the gas at 2.79. So the question we asked is, who was going to offset the difference? If you are not even selling to make a margin and you are selling at a discount, how are you going to recover the price that the producers are selling the raw commodity to you? So the commercial terms for that arrangement really skewed in favor of the investor, and the state was still going to lose money by putting that system in place. So I think that also stalls the investment a bit, and then we don't know where that also is, because Parliament was supposed to have investigated, issued a report based on the concerns we raised. Since last year, the report is still not out, and there's no conversation about the alternative. Because once you are flaring, by the time the investment comes, you also find that the gas may have either so significantly depleted that you can't get the throughput, and then you still have to pay the investment that you would have signed on take or pay. All right, once you are finished flaring the gas. So there is huge economic loss. We're just talking about PIAC reporting of the 2022 of over 160 million, with the 3 years of about 300 million. So in total, we've done close to 500 million of flaring in the past 4 years alone. You're not even talking about other economic loss. If you injected that gas into the economy, the jobs that it would have created, the businesses that would have benefited, the tax revenue that would have resulted from either payee and the other, that hasn't even been analyzed. So you're running into several billions for the loss of not planning and activating the gas potential of our resources. And
sorry, did you say we had flared $500 million worth of gas in the past 4 years?
So what I said is that we did an assessment between 2019 to 2021. And at the time, we have flared a little in excess of $300 million. So PIAC is also reporting of 2022, which is 169, right? 169 million. And so it's close to $500 million of gas has been flared. Right? And so in the energy sector alone, if you pick about 3-4 tickets of inefficiencies and poor decisions, you are running into several billions of dollars, all right, which could save this economy in this critical time. But we are still wasting resources propping up those inefficiencies because of policy inaction.
It must be frustrating doing analysis in the sector, but persist at it. Thank you very much for your work. That's Boakye of ACEP. Fascinating. So probably $470 million of gas fled in the past 3.5 years because of lack of investment into gas processing.